panic has hit the DC housing market, folks, with all the job losses. We're going to talk about that. Why are these people so desperate to put their homes on the market after only a few weeks of being notified that they were going to lose their job? Are there not any other jobs out there for these federal workers? Well, we're going to see what's happening with the housing market in DC, and that's going to give us a lot of detail and a lot of insight on what's really happening with the consumer, even well-paid people over in the District of Columbia. We're going to talk about the broader housing market, why the bubble is not bursting. Also, the central bank talking about more rate cuts. So not talking about rate hikes because prices are too high, not talking about hiking rates, but more rate cut talk. In other words, what they need to see in order to justify more rate cuts. It's pretty insane, folks. We're going to get into all that and more. Please make sure you're subscribed. Let's go ahead and get started right here. And here's how they put it over at Newsweek. DC housing market in chaos as federal employees panic. So tens of thousands of federal employees either laid off or notified that they're getting laid off. And it's causing quite a stir in the housing market there. In fact, the DA, not the DA, but the VA, Department of Veterans Affairs, VA hospital as I call it, had to lay off more than 1,000 employees that were on their probationary period. And that was just reported here. Also, it's been reported that the U.S. Forest Service was set to dismiss 3,000 workers, folks. Other federal agencies have been and are expected to continue being affected by the mass layoffs. So we're seeing every day or two, 1,000 here, 3,000 there, 10,000 here, folks. This is going to add up to be an economic nightmare for a lot of people. All right. Will it affect you and I or the people that are not federal employees? Well, we're going to get into that here in a little while later in this video. But first, the housing market situation over in DC. And on top of the actual layoffs and notifications of termination, we've got soft layoffs happening. What are those? Those are return to office mandates. A lot of people aren't able to return to their office job in person because they bought a home that was far away from their job. And now they're facing the choice of moving back, maybe selling their home or renting it out or going to rent a place back close to their job. So a lot of those people are quitting voluntarily. But a recent executive order urged federal employees to return to their offices or lose their job. And there's also been this federal purge by the DOGE Commission, and it's left a lot of workers wondering whether they'll have a job to go back to at all. Right? So people don't know. They're very frightened right now. They're uncertain on the future. Are these layoffs temporary while the audits are happening? Are these permanent? Well, a lot of people are erring on the side of caution and fearing that these are permanent job cuts and that they may not be able to find a job, especially in the city that they're in, which is DC. And we see this surge now in people listing their homes in the DC area. And here's how a few real estate professionals describe what's happening right now. In DC, a Redfin agent named Stuart Naranch, quote, "I recently worked with a couple who bought their dream home with me a few years ago, but now they're considering listing because they want to be closer to public transportation. They both work for the government and want more convenient commute because they'll need to return to in-person work soon," unquote. Another Redfin partner, Joe Chavez, said, quote, "Since the new administration took over, I've met with quite a few people, including federal employees, who are selling specifically because of the anticipated return to office orders." All right, and this is just the soft layoffs, the return to office. What about the people that are notified that their job is gone? He continues, "I also spoke to a client who has been looking to sell and upgrade to a larger home, but he canceled those plans because he's worried about losing his job due to restructuring of government jobs." All right, so let's just pause right here. We're told, and we've been told for a while now, years, that the consumer is strong, the consumer is resilient. So if the consumer was strong, a job loss shouldn't be any big deal, right? But we know the truth. The real situation is, the economic reality is, most people are just one or two paychecks away from missing their payment, whether it's rent, whether it's their mortgage. One or two paychecks away. Most people, we know the numbers right around 70%, maybe a little bit less in the DC area, but maybe even more because the cost of living is so expensive there. And even though they're making more money, their housing payments are more. Cost of living there is more. So maybe they're just as bad as the 70%, just maybe instead of one missed paycheck, two missed paychecks or three missed paychecks, and they're going to be on the street there. And this is being talked about on a pretty large scale here. Look at these headlines here. Out of the Hinduism Times, real estate market crash fears in Washington, D.C. as there's thousands of homes hitting the market now as people are looking to leave the city. And Blockchain News also put it as follows: surge in high-value real estate listings in Washington, D.C. So people with very nice, big, expensive homes are not immune to a couple missed paychecks, folks. And again, it could be the uncertainty where maybe it won't be a couple missed paychecks. Maybe it'll be a lifetime of missed paychecks if they never find another job. Well, the odds of finding a job that pays like they were making at the government job is very low, because we know that government jobs typically pay pretty good compared to the private sector. And a lot of people have came out and said that that's one of the reasons why the national debt's out of control, because we're overpaying a lot of people for jobs that aren't really that difficult. We see a lot of these people in these positions really don't work that hard, and they're not needed in some cases. A lot of times it's bureaucrats that are needed, and it's only the complicated red tape type of system that we have here that keeps a lot of these jobs in need. But if you cut the red tape and you try to deregulate, which is what the administration's been talking about, that's going to be a lot of people that are just going to be out of a job, folks. So the more rules and regulations and more agencies and bureaucrats you have, more jobs. It's pretty simple. So if you try to cut through that and simplify things and get rid of trim the fat, so to speak, a lot of people are going to lose their jobs. And will they be able to find a job to help them keep up with the cost of living that they chose while they were making more money? See, that's the thing. A lot of people base their home, how much they're going to pay for their home, based on their income today, right now, or back whenever they got their mortgage. But if something happens, they have to sell. Now, we haven't seen this on a large scale since 2008, 9, and 10 with the housing bubble going bust, but that's when the banks were basically afraid that they were going to implode. They were afraid that they were going to be out of existence. That was before the bailouts. That was before too big to fail came along. Now we're in a whole different world, folks. Home prices well above where they were back then, even doubling in some cases, with still no signs of a housing market crash. Let's go ahead and get into that right now. And we'll go over to Wolf Street here. Wolf Street gives us some nice charts here as usual. Austin home prices took another drop here recently, now down to, it looks like right around 435,000 from a peak of about from a peak of about 560,000. Now that's a significant drop, folks. Take a look at a couple other cities though. San Francisco came down a bit, but we saw this peak, then it came down. Not quite a double top, but it came down again. But no sign of a crash or a plunge like we saw back here, 2008, 9, and 10. San Antonio, bit of a drop there. And we see these seasonal spikes in the summertime, down again over the past winter months, but definitely not a crash or a very big drop. Denver, still hanging in there, not a big crash there in Denver. And the moral of the story is, the common theme here is, there is no crash. Yes, our home prices are down from the peak in quite a number of areas, but a crash is not happening because why? Because the banks are still loaning out money. Also, you have between 3 and 4 million people that got their home foreclosed after the 2008 housing bust. A lot of those homes, nearly all of those homes were bought by big money investors. Remember, they came in and bought thousands of homes, and the home ownership rate dropped. That's why you're not seeing as many defaults now, even though debt levels are very high and people are struggling, is because less people own their home today than they did back then. So less people owning their home, the less people to get their home foreclosed. And when you have multi-billion-dollar companies owning a lot of the homes now, they're not going to file for mortgage forbearance. They're not going to miss their mortgage payment because they bought the home with cash, right? And I've got to come back to the cause of all this, folks. It's credit and banks able to continue to loan out money, even though defaults and delinquencies are spiking. Here's another recent report here out of Odyssey.com. American credit card debt pushes to new record high once again. We're so far above the financial crisis levels now, with both debt, home prices, the cost of living, average car price, everything higher. So with debt higher, you would think that it would be more problematic and that prices would come crashing down because people have not much extra cash to spare, right? The savings rate near a 40-year low. But no, it's being propped up, folks, by lending and a lot of it's institutional buying in the housing market. Now, here's something very interesting. A lot of people are getting laid off from the FAA. The federal government began the process of firing several hundred employees at the Federal Aviation Administration just weeks after a fatal crash. So is it the crashes that are making them want to cut these jobs because they think they're the wrong people there? Or are the job cuts causing the crashes? There's another one that just crashed today. Southwest Airlines to slash corporate workforce. And let's talk about this crash that just happened today. Today here in San Diego, or a couple days ago actually, 2 pilots were just rescued of a military plane crash near the Bay in San Diego. And then just today, Delta plane crash at Toronto Airport, at least 18 injured. Delta plane overturns at airport. I'd like to see the number because it looks like there's a big surge in plane crashes. Some very fatal, some not so fatal, just a few lives or injuries. But the number of plane crashes has definitely spiked up big time. And how much has it been? How many has it been this year? Well, in 2025, there's 87 aviation accidents. According to the data from the National Transportation Safety Board, that's 62 in January and 25 already in February. And this is a big uptick, folks, but they're still saying out of here, air travel is still the absolute safest form of transportation according to the Transportation Statistics Report. So don't fear getting on a plane still the safest route. As far as we can see. All right, so more job losses out of the FAA, and is it going to make it less safe to travel? You might want to be cautious or kind of think about that the next time you buy a plane ticket. Onto this here, another report here indicating what's happening here. Americans have always sought debt relief after the holidays. Now their struggle is year-round. Overall household debt climbed to a new high, $18.04 trillion in the fourth quarter. That's at the end of December. Of course, it got worse here in January and so far in February. More people still borrowing money, going further into debt. So we're going to leave it at that here, folks. The bottom line is, it looks like they're going to keep this propped up. We got the Fed talking about more rate cuts and what they need to see. And basically, I'll leave you with this right here out of CNBC. They're talking about one of the Fed governors. More progress on inflation is needed before further rate cuts. You notice she didn't say deflation. So if prices are still going up, we still might see rate cuts. More progress on inflation. So prices going up, but more slowly, meaning less inflation, might be enough for there to be more rate cuts. And that's going to make prices go up even more, folks. Cost of living going up even more. Looks like the bubbles are going to remain inflated for a while, folks, unless we see something wild and unforeseen come in and pop this bubble. The black swan with a pin to pop this bubble. But the everything bubble is going to continue to get bigger. Home prices down in some areas, but overall not enough to make a significant difference in the budgets for people. More people still priced out of the housing market than ever. And it's insane. It's crazy. I can't even think of words for it. Let me know what you think about all this down in comments, people. Thanks for being here. As always, big love. Keep stacking. Bye for now. Peace.